Welcome to What the FICC, where I show you how to make money in the fixed income, commodity, and currency markets. Now today, I want to highlight crude oil, specifically my trading strategies for crude oil in the coming quarter. That's Q1 of 2024. In today's episode, I'm going to highlight how crude's performed relative to other commodities, what areas of the actual energy space that have been outperforming in the recent weeks and months, and specific trading strategies for crude oil and related equities. First, let's talk about the broader commodity space. Now, this first chart highlights the commodity subgroup performance since rates peaked October 19th. Now, why when rates peaked? Well, it was a turning point for commodities and just risk assets in general. Remember, S&P 500 bottomed in October. Now, what I want to highlight in this chart is not only precious metals and base metals outperforming since rates peaked, but notice that energy has stopped going down earlier this month. That's what has my attention. Everybody's talking about gold, it's new all-time highs, and copper catching a bid. Well, I want to focus on energy digging in and finding support at a logical level. That brings us to the next chart. Now here we have crude oil, heat oil, and gasoline futures all digging in and finding support at a logical level of former support, right? Former shelf of lows for crude oil, heating oil, and gasoline continue to act as support. Now, until sellers drive prices below these critical levels, there's no reason to get short. In fact, I like getting long against these levels. Risk is really well defined, and if we're wrong, we're going to know sooner than later. I like that. There's a couple other reasons. Sure, base industrial metals, precious metals have been outperforming over the past month or two. But if you look at our equal weight index ex ethanol and our equal weight base metals index overlaid, energy and base metals trend together. So yes, it's important to know what's outperforming and what's underperforming, but you got to understand that energy catching higher and base metals catching higher is common. So if copper and all of its gang is breaking to new highs, energy likely will do the same. Number two, looking at energy versus the base and equal weight, our equal weight base industrial metals index, it's digging in at a shelf of former lows here, another logical level to dig in and catch higher. All right, so we're seeing crude oil, gasoline, heating oil, all holding above former support levels as they dig in relative to the current leadership group. Now, great information, Ian. What do we do with it? What are we going to do with it? Well, I'm going to give you 4 ways to play crude oil in the coming 3 months. First up, crude. Now, I really like getting long crude above 75. Just broke above that level yesterday. It acted as resistance earlier this spring and acted as support just last month. So seeing buyers reclaim that critical 75 level, I like it long, again, as long as it's above 75. Initial target back up around 83, secondary objective up towards 95. Now you'll notice it's range bound, and I expect crude oil to remain range bound in the coming quarters. Until it's back above 95, it's going to be a choppy mess, but that doesn't mean we can't take advantage of energy. It doesn't mean we can't take advantage of crude oil. Again, above 75, initial target 83, secondary objective up towards 95. Now, if you don't have a futures account or you can't trade futures, don't worry. The next 3 trades are for you. First, the US oil ETF, USO. Now, this is a pure play on crude oil. For USO, I like getting long back above 70. Let's call it 72. Give it a little wiggle room. That's the 75 level that I just mentioned in crude oil. Now, so USO above 72, like it long, initial target around 80, secondary objective up near 93. Now, USO, just like crude oil, range-bound market. Now, we zoom out on the chart, you get an idea of where crude oil or USO has been over the past couple years. Here it's been stuck between 89, 86 area, and 60, just chopping between those levels. Again, if we get back above 72 in USO, like it long, initial target up around 80, secondary objective up towards 93. Now, moving on to the stocks. Now, not a pure play on energy, or not a pure play, I should say, on crude oil. This is the XLE sector ETF. Now, I look at this chart, I see an ascending triangle, classic chart pattern here, and it's got bullish implications. Now, why? Buyers keep stepping in and driving prices higher at a higher level, right? We're getting a series of higher lows while they continue to find resistance at this 93 level, 93 and a quarter. Now, I love that level. As that's our breakout level. You know, if and when buyers can drive price above 93 and a quarter, path of least resistance is higher towards 110 with a secondary objective up towards 140. Now, if you don't want to trade the indexes, you don't want to trade XLE, there's a lot of individual names. Today I'm going to give you one, and that's a big daddy, ExxonMobil. XOM is the ticker. Now, hanging in there. It's hanging in there. Almost flashed a sell signal. Almost flashed a sell signal here in the past couple of weeks, but it's holding just around that 104 level that coincides with those 2014 highs. Former resistance turning into support. Now that 100 level has acted as support over the past couple of years here. And this is like crude, like gasoline, like heating oil. ExxonMobil is finding support at the lower bounds of its multi-year range. Now, as long as it's holding above that level, I don't want to get short. I want to trade against it. I want to take the long side here in ExxonMobil. And here are our levels. You know, as long as XOM's above 98, I like it long with an initial target up around 120. And if and when buyers can absorb all of this overhead supply here at 120, I like it long with initial target up around 132 here. So quick recap. Energy contracts have stopped going down at a logical level of support on an absolute basis, and at a logical level of support relative to base and industrial metals. So I just give you 4 ways to play energy from the long side as they bounce in the coming 3 months. ExxonMobil, XLE, USO, and of course, crude oil futures. That's it for today. If you enjoyed the video, click the like button, subscribe to our channel. And if there's any topics you want me to cover in the coming weeks, shoot me an email. Address is on the screen. If you want more of my research and analysis, subscribe to All-Star Charts Premium. You can use the link in the description to become a member. It gives you access to all of my research and the teams. Thanks again for watching, and I'll see you next week.